hope you're ready. Christmas is sneaking up on us this year. Happy holidays, everyone. Welcome to the Northern Miner Podcast. My name is Adrian Pocobelli, and I am excited for this holiday season. And let me tell you, I'm excited to record this podcast. And you know why? I have a new laptop. You would not believe the troubles I have been enduring since I upgraded the driver on my microphone. 3 months. You know, you'll record a segment, you'll go to listen to it, and halfway to 3/4 the way through, it starts to crackle, and you have to re-record it, and then you have to always unplug and replug it so that it starts to work again. It was a nightmare. So I am absolutely thrilled. I feel like the shackles have fallen from my hands. So I hope you have an exciting holiday season ahead of you. Here in Germany, we celebrate Christmas on the 24th. So Christmas is actually coming on Friday in Germany. And actually my girlfriend, who is Bolivian, they also celebrate on the 24th. So I am a North American. I'm from Canada, Saskatoon, Saskatchewan. Of course, we traditionally celebrate on the 25th. So we got a lot of Christmas ahead of us. And it is sneaking up quickly. I have most of my holiday shopping done. But if you find yourself cornered and you have a miner in your life, you may consider the Northern Miner newspaper. You can get it in physical or digital format. Just go to northernminer.com/subscribe, and we will bail you out of your Christmas conundrum. And you know, we may have a great year for gold ahead of us. So this may be the year to dive in and get that, alpha that the Northern Miner provides with its unique profile of these junior mining companies. And we all know those junior miners, that's where you get like the multiple X's, but be careful, folks. That's all I have to say. I got into this business with the rare earth stocks about 10 years ago, 11 years ago, 12 years ago now. Yeah, I mean, I did fabulously with that, but if you put it all together, all the investment in these stocks, I'm not sure how well I did, maybe up a little bit. So you really have to be careful. And another thing to consider at this time of year is tax loss season. This is something to really take seriously, especially for you kind of early investors. I'm looking closely in Germany. Again, I'm neck deep in crypto, and I'm learning all sorts of things I don't want to know. So there is still time to make adjustments. It's been a banner year for many people. So take a look, do your research. It is eye-opening, and it is something that you definitely want to do. And it's a good way to set yourself up for next year as well. Looking at the markets, I mean, it's been a tough slog these last 3 weeks, hasn't it? I mean, this Omicron thing really kind of rained on the parade. It felt like we were about to just rocket higher. And then Omicron came on the scene. Interestingly, you look at the 10-year bond, I mean, it's just like a rock on the weekly at 1.423%. So, I mean, we remain at 1.42%. I think there's been some volatility in between, but when we come check in here, we just see the same number. So that is interesting. You're starting to sense that maybe there is a bottoming in the markets, but who knows? Let's see. I mean, it's getting late for a Santa Claus rally. I don't even know if we could call it that at this point, unless things really went crazy for the next week, but I don't know if we can expect that. I wouldn't necessarily plan on it. There are very smart people who are saying you should prepare for inflation. There are very smart people who are saying we're heading for a deflation. You should have more cash. There are people who are saying we're heading for deflation and you should have more gold and not necessarily cash. So it's a lot for the retail investor to consume. And so my takeaway is diversification. If you are all in, like many of us are at this point, hoping for our Santa Claus rally, if you are all in, if we get a move higher, take the chance to diversify into a bit of cash. As you should have before, as I should have before, take the time and diversify, because we don't know where this is going. The Fed is tightening on the taper. And my whole thing with this Fed business and this inflation, deflation, it appears to me as if this inflation is supply driven. It has to do with these supply lines. Again, we don't have enough oil. We don't have enough natural gas here in Europe. It's getting pretty expensive. We don't have enough stuff coming in. There are these, potential lockdowns, zero tolerance in China. It's just hard to get things moving, and that is raising prices, seemingly. Shortage of semiconductors, all this stuff. So we have this, supply side driven inflation. Meanwhile, the Fed is tightening monetary policy as a result. But interestingly, this is just how I see it. Feel free to disagree, but I'm not sure that the monetary policy is necessarily the cause of the inflation. It's not the money supply. I mean, maybe it is. We don't know, but it seems to be the difficulty in getting things from one place to another, in producing things, and the more expensive copper, the input costs. Again, it's back to this idea, the Fed, tightening or loosening, that doesn't create more copper. The Fed tightening and loosening does not create more oil or natural gas, at least not immediately. So that's my take here. And so, as we've been hearing for 10 years from the gold bugs and the inflationistas, as Tom Keene on Bloomberg likes to call them, we've been told that it's because of the so-called money printing, which it sounds like it really is money printing, but that's also debatable. But it's not clear that that's the cause here. So that's the weird sort of framework I see, which just I think it does make sense to be cautious here and to, frankly, not be all in. So if we get a run-up here, you may want to diversify, not financial advice, but that's probably what I'm going to be doing, just into something a little more solid. So with that, we have a great show lined up ahead of you. We have Trent Mell from Electra Battery Metals, and he's in conversation with Frik Els, executive editor of mining.com, and they have a very interesting discussion. Again, Trent is talking about these very things, supply lines, which he says are getting too big. He says we need to focus on domestic nickel production, something we've been pounding the table here at the Northern Miner Podcast on for 2 years. I totally agree. And we have the resources for it. We can do this. And so a very interesting discussion. It confirms a lot of things that maybe we already thought and adds some more details to get us a clearer and clearer picture of what's going on in these markets. So lots to look forward to there. If you want to find us online, you can find us at northernminer.com. You can find us on Twitter at Northern Miner. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, Stitcher, Apple Podcasts, and SoundCloud. And with that, let's turn to the news. And turning to the website, Chile has elected a new president, and we have a story here about how the Chilean miners are asking the new president-elect, Gabriel Boric, to foster the country's industry. This is by Cecilia Jamasmi. It says here, a leftist millennial who rose to prominence, leftist, is leftist pejorative? I'm not sure. It's sort of like right-wing. Right? I mean, is right-wing a pejorative? Anyways, let's not dive into that. A leftist millennial who rose to prominence during anti-government protests in 2019 was elected as Chile's next president on December 19th, following a bruising campaign against a free market and anti-immigrant candidate often likened to former U.S. President Donald Trump. The National Mining Society, SONAMI, an industry body, congratulated Gabriel Boric and said voters had, quote, sent a clear message, end quote, about the need to maintain Chile's economic and social development. Quote, we trust that the spirit of programmatic convergence, moderation, and openness to dialogue shown during the last week of the campaign will prevail. Boric, a 35-year-old former law student, vowed during his campaign to bury Chile's, quote, neoliberal, end quote, economic mode. Although he later softened his message, he has kept the idea of giving the state a more active role in the sector, as well as higher royalties. Now, as we all know, or if you don't, Chile, again, is sort of seen as a bellwether and a bit of a leader in the mining world in Latin America in terms of adopting what we might call Western-friendly policies. This has changed in the last year or so, and it looks like this is going to continue against the neoliberal direction. And the word neoliberal is a whole thing. You could probably spend a show unpacking what that word means, because it gets used pretty casually. But generally in Latin America, it's sort of seen from a Latin American perspective as what you might think of as Western corporate capitalist, corporations run amok, low regulation and free market privatization. That's sort of how a lot of Latin Americans interpret the word neoliberal, at least according to my girlfriend. And that's how it's often interpreted in Latin America. Continuing on, he is also a fierce supporter of a state lithium firm and green investments. Since Chile not only is the world's top copper producer, but has the largest known reserves of lithium, his vision could prove positive for the country if he's able to deliver on campaign promises. Both copper and lithium are among the most coveted commodities, as they're used both in electric cars and infrastructure to support other greener technologies. During his victory speech, Boric reiterated he would oppose mining initiatives that, quote, destroy the environment, particularly the controversial $2.5 billion Dominga copper iron ore project that was approved this year. Okay, so that is happening. Now, we have another story over in Peru. MMG shuts down Las Bambas copper mine as talks fail. So we're getting a really interesting picture here, thanks to Cecilia Jamasmi, once again writing the article on what's going on in Latin America, which is such an important area of the world when it comes to copper and mining in general. So taking a look at this, Chinese miner MMG is ending copper production from its Las Bambas mine in Peru on December 18th after talks with locals to end a 27-day road blockade, the latest of several in the past year, failed. So you have a Chinese miner in there with one of the world's biggest copper mines. Now, we just saw it in the last story. I mean, these locals want more, a bigger cut. Okay, so MMG is playing hardball by shutting it down. Residents of Chumbivilcas province have been blocking the road used by Las Bambas since November 20th as they demand jobs and economic contributions from the company, which they say generally fail to benefit residents despite its great wealth. Go to our show with Mark Bristow. He talks at length about this, and he's one of the leaders in this area in the mining industry. Continuing on, the company, a unit of state-owned China Min Metals, warned earlier this month that it would halt Las Bambas as blockades were preventing essential supplies from reaching the operation. The mine, which accounts for 2% of the world's copper supply, will produce about 290,000 tons of copper concentrate this year to December 18th. The company has already said in July that 2021 production at the mine was expected to come in at the low end of its 310 to 330,000 ton forecast. At issue is a dirt road that Las Bambas uses to transport the copper from its mine to a seaport. Communities along the road asked for more logistics transport contracts, financial compensation for the land used to build the mining road, and actions to reduce alleged damage to their crops caused by the large number of trucks on the road every day. They also want to create a fund with 8% of the mine's annual profits to finance productive and social development projects, while the company offered financing for individual social projects. So they want a fund with 8% of the mine's annual profits. And, people can laugh at that. I might chuckle, but that's the reality out there now. And what are you going to do? I mean, this is social license. MMG believes it's the government's responsibility to pave the route, but a long-term solution would be building a separate freight train link. And I just have a question, like, how much is that going to, we have it right here. I was going to say, how much is that going to cost? Construction of the railway would take more than 5 years and cost $9.2 billion, according to Peru's Transport and Communications Ministry. How much would it cost to give 8% of the profits? Is my only question. Is it $9.2 billion? Maybe that's more. And if they are making tens of billions of dollars, well, maybe they should be giving a little bit more or meet these people halfway. I don't know the details on this, but just some random thoughts as I read this. So MMG facing some issues in Peru. Turning over to the story again by Cecilia Jamasmi, Rio Tinto picks outgoing Canadian ambassador to China as chairman. An interesting choice because China and Canada don't seem to be getting along that well in the last few years, so it's an interesting choice to pick the Canadian ambassador to China. Taking a look, Rio Tinto has picked outgoing Canadian ambassador to China and veteran management consultant Dominic Barton to lead its board as the miner tries to put the destruction of ancient rock shelters in Australia behind it. Barton will join the board in April and take over as chair after Rio Tinto's annual general meeting on May 5th, replacing current chairman Simon Thompson. Thompson, whose 4-year stint as chairman was marred by the destruction of the Juukan Gorge caves, announced earlier this year that he would be stepping down once a successor was found. The outgoing chairman acknowledged that he was, quote, ultimately accountable for the blasting at Juukan Gorge to expand an iron ore mine. And we have a quote from the new chairman, Dominic Barton, quote, "It is a great honor to succeed Simon as chair of Rio Tinto. Returning to the private sector, I am excited to join a company with world-class people and assets as it navigates a shifting competitive landscape and seeks to emerge as a leader in the climate transition." So, more changes at Rio Tinto, more fallout, really, like over a year later of the Juukan Gorge incident. I mean, that was quite a while ago, and the fallout is still happening. Now, just on, again, supply chain, Victoria Gold lowers production guidance due to supply chain troubles. Now, this is an interesting story as well, and it is backed up by what we're sort of hearing from Mark Bristow on margins, the potential for margins to be lowered as a result of inflation. Now we have a story on Victoria Gold. This is by Naimul Karim. Victoria Gold expects 2021 gold production to be 10% lower than its previous guidance of 180,000 ounces due to supply chain issues. It produced 114,726 ounces of gold in the first 9 months of the year. So it's not just that costs are moving higher, it's that they can't even get what they need to get the gold out of the ground. As a result of the adjusted production guidance, all-in sustaining cost per gold ounce is expected to be up to 5% above its earlier guidance of $1,175 per ounce. And we have a quote from John McConnell, CEO, quote, "While it is disappointing to be revising our gold forecast for 2021, our cash flow remains strong and we will realize the delayed gold ounces early in 2022. Like many companies, we are experiencing pressure on our supply chain. We continue to work with all our suppliers very closely to avoid such disruption as COVID-related challenges persist." The supply chain issues involved a 5-week delay in receiving drip lines used to irrigate the heap leach pad. Low-flow drip lines were installed instead until the new drip lines arrived, which resulted in less leach solution being applied to freshly stacked ore on the heap leach and therein extending the leach cycle. Freshly stacked ore contains the highest portion of recoverable gold and contributes significantly to gold production, the company said. We have a quote from Andrew McKitchuk at BMO, and he says, "While today's announcement is negative, we expect the net long-term impact to be minimal." So, more interesting supply line issues. A few M&As I want to touch on. Lundin Mining to acquire Jose Maria Resources for $625 million. This is by Naimul Karim. And this copper gold project is in San Juan, Argentina. And according to Lundin Mining CEO Peter Rockendell, quote, "In our view, this project is a unique and scarce opportunity. Lundin Mining has been following Jose Maria's advancements into a world-class ore body for a considerable period of time." So you can read all about that on northernminer.com. Gold Royalties makes an unsolicited offer for Elemental Royalties. And I went to Elemental Royalties' website, and yeah, they just have a bunch of royalties. So Gold Royalties is coming in, and this is by Northern Miner staff. And they are proposing to acquire Elemental Royalties in an all-share deal valued at $130 million. Now, an interesting point on these royalty companies, I think it was E.B. Tucker on YouTube, was saying how because royalties companies have their allocation basically locked in, they are not subject to the same inflationary pressures as the gold miners themselves. So these royalty companies are sitting pretty right now. Now, what's interesting, though, is when the royalty companies start sitting too pretty, the mining companies need to start renegotiating. So that can happen. It's not like, if you're facing bankruptcy, unless your NSR goes down, things can be renegotiated at that point. So interesting dynamics there, but nevertheless, a little bit of consolidation. I mean, nothing has happened here. It's simply an offer. And Gold Royalties said it is taking its offer directly to Elemental's shareholders after its two previous approaches to the junior, the first on October 21st and the second on December 15th, failed to engage Elemental's board of directors. Unsolicited. What's the difference between unsolicited and hostile takeover? I guess if the board comes out against it, it becomes hostile. Now, we have from a Gold Royalty press release a quote, Gold Royalty has completed 3 acquisitions in 2021, and in each case, the implied premium paid is higher today than at the time of the transaction announcements due to the strong performance of the Gold Royalty shares, which could further enhance the ultimate premium realized by Elemental shareholders. So you can read all about that on Northern Miner. We have some analysts that weigh in, so if that interests you. And another headline, Bear Creek Mining acquires the Mercedes mine from Equinox, and that is a gold-silver mine in Mexico. And Equinox took over the Mercedes mines previously when it took over Premier Gold Mines last December. So they're basically getting rid of one of the assets in a takeover and giving it to Bear Creek, and it looks like they will get a 2% net smelter return. NSR royalty payable on metal production from the Mercedes mining concession. So not an insignificant thing. I mean, these royalties are hot right now, aren't they? And finally, global coal use to hit record high despite climate fight. This is by Cecilia Jamasmi. And just a couple of lines on this. Global coal-fired power generation is expected to rise by 9% and hit an all-time high by the end of 2021. Despite efforts to slash carbon emissions, the International Energy Agency said today. Overall coal demand, including its use in steelmaking, cement, and other industrial activities, grew by 6% in 2021 to 8.11 billion tons, the Paris-based group said in its annual report. That puts demand on track to reach a new record high in early 2022 and to remain at that level for the following 2 years. Increases in coal demand in Asia will be offset by falling demand in the US and the European Union by 2024. And we have a quote from IEA Executive Director Fatih Birol, and he says, quote, coal is the single largest source of global carbon emissions, and this year's historically high level of coal power generation is a worrying sign of how far off track the world is in its effort to put emissions into decline towards net zero. Without strong and immediate actions by governments to tackle coal emissions in a way that is fair, affordable, and secure for those affected, we will have little chance, if any at all, of limiting global warming to 1.5 degrees Celsius. So the case for nuclear continues to strengthen. Those are your news stories. Now let's take a look at metal prices. And turning to metal prices, we'd like to thank our friends at mining.com/markets for providing us with these prices each and every week. And on December 21st, the shortest day of the year, gold is trading at $1,790.49 per ounce. That is $7 higher than last week. Silver is also higher at $22.40 per ounce. That is 15 cents higher than last week. Platinum is $1 lower at $932.29 per ounce, and palladium is higher at $1,770.19 per ounce. That is $87 higher than last week. And turning to our industrial metals, copper is a penny lower at $4.32 per pound. Aluminum is 3 cents higher at $1.22 per pound. Lead is 2 cents higher at $1.05 per pound. Nickel is at $9 even. That is 5 cents lower than last week. And tin is at $17.94 per pound. That is 27 cents lower than last week. And cobalt is 31 cents higher at $31.73 per pound. And zinc is at $1.56 per pound. That is 5 cents higher than last week. So what do we see? A slight move higher in the precious metals. While industrial metals continue to consolidate at higher levels, in particular aluminum, lead, cobalt, and zinc. So Dr. Copper, they say copper takes the temperature of the global economy. And what's interesting is Dr. Copper is holding pretty strong at $4.32 per pound. So sometimes no news is the news. And those are your metal prices. And coming up, we have Electra Battery Metals CEO and President Trent Mell in conversation with Frik Els, executive editor at mining.com at the Global Mining Symposium. And they discuss the fragility of commodity supplies, particularly for battery metals, lithium and nickel and cobalt in particular, and also how Trent thinks that Electra Battery Metals will be able to produce some of the cleanest, if not the cleanest, cobalt sulfate on the planet. So I hope you enjoy the conversation, and we will see you on the other side.
Hi, Trents. Great to be talking to you. You're in an exciting phase of your business. Just 2 weeks ago, you kind of changed from First Cobalt to Electra Battery Materials. I first just need to say also that you have a 2-decade record in mining. So this is not your first company. You were also CEO of Falco, where you brought 6 million gold ounces into being. You are head of mining for Pear Tree Securities. I believe over your 20 years, M&A, equity financing, offtakes, etc., it all adds up to about $2.6 billion, which, if my math is correct, is 130 million a year. Tell us a bit about why we're no longer First Cobalt, but Electra.
Yeah, thanks, Frik, for the opportunity, and Anthony. Yeah, it's been a ride. I started the company 4.5 years ago. 2017, cobalt was the best performing commodity, and we set about on a journey to find cobalt for the North American electric vehicle market. Our success came in a different form. We were looking at mineral assets in Cobalt, Ontario, and again in the state of Idaho. So the Idaho asset is still very much a focus of ours. We still have an asset there, but along the way we merged a few companies together. We picked up this refinery, and I think in our discussions now with the downstream, we're 12 months away from first production with the cobalt asset, the cobalt plant, but the automotive companies need more. And if you think of the supply chain and all the investments we've seen this year, it's assembly, it's the battery plant, and now they're looking at the cathode active material. And just before that, the next step upstream between our refinery and cathode material is PCAM, precursor material production, and that's a real gaping hole in North America. Yeah. And so the auto companies are saying, look, if you can create a complex like we see in Harjavalta in Finland and elsewhere in China, create an environment where a PCAM producer can come and co-locate with you. Don't worry about the nickel. Like we can backfill all of that environment with you. And so we've outlined now with the Electra name. I wanted to wait till the financing was done on what is now phase 1, the cobalt plant, but it's a 4-step process. Cobalt production next year, battery recycling, then nickel and PCAM to encompass a larger solution for the EV supply chain.
You fuel to the finish for the cobalt plant, and then you go on to the next phase, which is recycling. I was wondering about that. I've read a few reports that says recycling of battery materials is kind of in the future, that we're going to need primary supply for a good while yet. We know when the battery in a Tesla is past its best life, it goes into a battery pack for home solar. Tell us a bit more about the recycling, because that could be a big part of the whole EV story, right?
Yeah, it's big. It's a huge priority for the EVs, the auto manufacturers, because they've got teams of people trying to figure out what do you do with end-of-life batteries. And you're right, Frik, the end-of-life battery for an EV is some time off, particularly on this continent where we're late to the party. On the other hand, we've all got phones and laptops, portable tools, toys, right, that have lithium-ion batteries. And so that's the market where everybody is focused. So the opportunity in the future is going to be fairly large, homogeneous batteries. So actually, in some ways, maybe it gets easier as the tonnage goes up. The opportunity today is a more diverse set of batteries that contain a lot of cobalt relative to an EV. So the opportunity there is some high margin. The challenge you have with EVs today, or at least the recycling component, we've got a peer in the recycling market looking to build a plant in the US for some 350 million US. And so the payback when the tonnages are smaller, it's a long horizon. In our case, we're going to have a $200 million plant built next year, right? It'll be up and running, same team, a lot of the same equipment. In fact, some of the equipment that's there now that we are not redeploying for the new cobalt plant is going to be redeployed for recycling. So for us, it's a two-step process. It's a demonstration plant next year, focusing on the leach and then the extraction. And then the second step is going to be the beneficiation of the extracted minerals into a usable form so that you can kind of close that loop up. And you're learning it with a growing supply chain, and you're learning, in tandem with the growing supply of batteries.
You said it's quite cobalt rich, the recycling material. So we're talking iPhones and mobile phones here.
Yeah, it's the LCO cathode. So in contrast, the dominant cathode, of course, in the EVs, as you know, is the NCM, nickel, cobalt, manganese. And the ratio of cobalt to nickel has gone down quite a bit. Not so with your portable electronics. And so when we look at it, I should point out our VP project development, Mark Trevisio, ran the Glencore smelter in Sudbury for a time, and he was there when they started whole battery recycling. So we've got some great bench strength, and we've got a view. The margin opportunity is big. You got to do it right. I think there's a lot of talk about technology. A lot of people like to tout their recycling processes. It's a leach, right? I think we overstate that as an industry as part of our own sales pitch. I think the challenge really is the infrastructure required to get it off the ground.
I believe the stuff is called Black Mass, which sounds a bit like a Stephen King novel. Tell us a bit more about that. How does this work exactly? You said it's a leach process, so maybe it's not rocket science after all.
Yeah, and thank you for the prompt, because when you think of battery recycling, there are two distinct steps. The first step is, I'll call it more logistical in nature, where you're collecting the batteries. So picture, warehouses all over America, concrete bunkers, because these things can catch fire, explode. So you collect the batteries, you assemble them, you discharge them, you take the casing, the plastics out, take the coil off of it, and then you're going to basically crush and sieve the residual. It's the anode and the cathode material. And so what you're left with is a black sand, a black powder, which is why we call it the black mass. Not a very great name. And so where we step in, not so much there, because there's a lot of players that do that and do that well. People that are already in the auto supply chain, private company. Now, a company like Li-Cycle or Redwood Materials, two much larger treasuries than ours, want to do, I think, both parts. Certainly Li-Cycle does. We've got 25 contacts around the world that are already doing that. Why? Because most of them are going to a pyrometallurgical facility that happens to be in Sudbury. The recoveries aren't as good. The greenhouse gas emissions, they don't recover lithium. They don't get the graphite. And so where we step in is once that black mass is produced, it would get delivered to us. And then we would put it in solution. So we've been quietly doing quite a bit of work in the last 6-8 months. We're about 2 weeks away from an engineering study where we're won't release all our secrets, but give an idea of what that might look like. It's a pretty low capex for us to step into that.
I guess a big part of your move to become Electra Battery Materials was nickel. Everybody's heard Elon Musk asking for nickel, people to make more nickel. And at the same time, you also have battery technologies changing, LFP, which no nickel, no cobalt, become a real big success. I think in China, maybe it's captured almost half of the market in a short period. But you're betting big on nickel, obviously.
Yeah, and the LFP quality of that battery has gone up, no question about it. It's still not going to find its way into luxury vehicles. Yeah. And in northern climates, LFPs don't perform very well in the cold. So I don't think they have a huge future in North America or Europe, particularly for the luxury lines and some of these newer vehicles that we're seeing out there. But I won't discount it. It's been helpful. The downside to LFPs, they're cheaper, easier to make. You can't recycle them. There's nothing in there to recycle. So there's an end of life challenge there. But look, our view on NCM, that the EV market's growing at a CAGR of 26% through to 2030. The supply demand, there's room for a lot of different cathodes out there. North America's got a lot of nickel. The challenge we have when we launched this new brand, we likened ourselves to the role of a bridge, right? Bridging the resource endowment that we've got in the continent with all the EV plants that are now being built. Right now, we're mining our nickel. China, I think, is about 90% of the nickel sulfate conversion market. So to mine it in Canada, convert it in China, and then bring it back into a North American EV doesn't make sense from a sustainability perspective, nor from a cost of the cells.
So that was actually one of my questions. I do sense that there is, apart from obviously market developments and EV demand and uptake, there is kind of a geopolitical aspect to all of this as well. The center of gravity in mining and definitely the EV world is kind of shifting east. It's more Europe, it's North America. Do you think that everything you produce and take in almost is going to be from North America or from ex-China, so to speak?
The feedstock for cobalt is trickier, right? Because most of that's concentrated in the Congo. So we'll be purchasing feed from 3 of the 4 biggest cobalt operations in the world, China, Mali, and Glencore. And we've got 5-year contracts there. Nickel, again, in discussing with the automakers, the advice is let's focus on PCAM, and then we will jointly figure out the nickel. And I don't want to simplify it. The nickel plant relative to the cobalt plant it's a big lift. But we've got a federal government that's got a $2 billion strategic innovation fund. They want to build out the supply chain. This is an area we can control. So it'll be a joint effort at the end of the day. But I do think when it comes to the nickel inputs, I don't know why you would need to go beyond North America, given the endowments that we have on both sides of the border.
And there's, as you mentioned, there is a political will now. After decades of neglect, people seem to have woken up about critical minerals and supply chains. I guess COVID also gave all of this a bit of a boost as well. So there's onshoring is definitely a trend.
Yeah, it's interesting because when we started the company, we toured DC. We were in the White House. In fact, I was back there a few months back now. So there's acute attention. And there's a greater understanding. It's not so much going to them explaining the importance of the supply chain. It's more how can we help you. So the political awareness is always there. There's still the NIMBYism on extraction. If you go to DOD, DOE, they'll help you with infrastructure, plants, and things of that nature. They don't really want to get in the extraction game. So there's some work to be done on that side. But to your point about onshoring, where the discourse has changed is really within the boardrooms of the auto companies and their battery partners, right? The investments are being made here. COVID, microchip shortages, it just underlines the obvious that our supply chains are too big. We're circumnavigating the world sometimes twice over to get our battery parts to us or our car parts. And there's a real focus on getting that domesticated. And now you've got the ESG rationale to do it as well, right? Measuring your Scope 3 emissions for transport of these elements around the world is going to be accounted for in your vehicle. And that's an important attribute that consumers are looking at.
And also it gives auto manufacturers something to say, right? Yeah. That I think international shipping is something like 17% of global emissions, or anyway, it's huge. It's part of everything is part of a bigger process, right? And I think that's where you kind of tap into a whole range of different processes or trends that are going on.
Yeah, container rates I think are 10x out of China that what they were a year ago. So and delays, right? When we ordered our plant equipment for our refinery, we made a deliberate decision not to order stuff out of China. We had options to build them in Europe, North America, or China. We said we can't do China because of the unreliability of that network. When you're on a tight construction timeline, we get 12 months until we're producing. So that's an important part. The other piece that plays in our favor when we talk to the supply chain is being in Canada, right? We've got a hydroelectric dam a matter of kilometers away from us. So we're 100% hydroelectric. So we've got clean power. It's hydromet. So we've got zero emissions. There will be no cleaner cobalt sulfate production on the planet. We know that for a fact. And I think we can carry that through to the nickel production, to the PCAM as well. And that plays into the overall narrative that we're trying to strive for.
Even though it's a North American story, there's also a bit of internecine fighting in the industry. So there's a question from the audience here about the Buy America First, that kind of thing. I know there's ongoing talks about that. What is your view of that particular? I guess it's part of NAFTA, the whole thing. Yeah.
Yeah, it started with the last administration where there was a big push to support this onshoring, but I think, frankly, just sound business decisions reinforce that. And if the Buy America has to do with, Canada relative to the U.S., well, it doesn't really impact Canada. If you look under, for instance, the Defense Procurement Act, where DOD can step in and buy materials and fund projects, Canada is treated no different than any other of the U.S. states, and it's the only country in the world that gets that kind of special treatment. There's a critical minerals roundtable, cabinet ministers from Ontario, Quebec, Ottawa, in touch with White House officials and others, and we're part of that dialogue. So I think there's a view that Canada can and must play an important role, particularly because mine development is easier in this country, and the resource side is a piece they see us really playing a role in.
I do believe Biden has said that they're not that much into mining, but they're very much into processing. At least Canada can fill the whole supply chain. As Electra is an example of that. You also have a cobalt project in Idaho.
Yeah, and the cobalt plant, I guess it'll have to it's an open question, I think, what the future holds, right? Are we a chemicals company, as some of the analysts are now starting to characterize us as? Are we vertically integrated, or do we have two different companies in one? And I think we'll have to wait and see, because that Idaho asset, Cobalt's had a great run. It's sitting at about $29 on the metal side from a low of 12. I think we'll finish over 30 this year. So I wouldn't want to make any rash decisions, but as we continue to drill, and I do see a mine there, it's a few years out. And the question is whether you would do that within Electra or try to, farm it out or do some other value accretive transaction for our shareholders.
You mentioned prices, and cobalt is up substantially. Lithium is at an all-time high. Nickel itself is up double digits, if not more. Is there a bit of a chicken and egg situation maybe arising where there's huge demand for EVs? It pushes up raw material prices. And then at some point it becomes a little bit too expensive. There comes demand destruction because raw materials is almost 40% of the cost of an EV. So what gives first, the prices or the demand?
I should probably be asking you that question. I have that. I'm in the UK actually currently and meeting with investors, and that's one of the questions I had this afternoon: is how do you fix this? Anybody who studies the demand projections knows that the raw material supply is going to become an issue. I mean, 2 years ago, everybody was chasing their tails over cobalt. Now it's nickel. We're running to Indonesia looking for nickel deposits in a state that's going to have a terrible, carbon footprint, but it's going to be responsive to our demand needs. So we've got a lot of conflicting issues. We've got there's opportunities to develop assets in Western economies that are taking way too long to permit. But when I look at the supply chain, the resource extraction side just can't respond fast enough. For Electra and for what we're doing, I think our glide path is well timed. I think our cobalt's going to be early for this market, so a lot of it will follow our clients' battery making process back to Japan, Korea, maybe Europe. But as we get the PCAM and the nickel plant operating, I don't want to say the nickel is somebody else's problem because we're going to have to source it from somewhere. But our view is we need partners. We're a tiny player in a land of giants, and if we can hitch a part of our wagon to a big automaker and their battery partner, then it gives us a little bit of security because they are actively looking to lock down 5 to 10 years of nickel supply as we're developing our own asset out.
You say you're a tiny player at 60,000 tons. That's kind of what you're targeting at the plant. That's not nothing.
That's not nothing. No, you're right. I mean, our cobalt plant, we last week made the decision to upsize that. Our bottleneck was our crystallizer. So instead of 5,000 tons subject to a permanent amendment, we're going to be making 6,500 tons of cobalt. So, by at the 5,000 level, that's about 1.5 million EVs per year on an 811 cathode with assumptions on battery size. So the nickel equivalent, it's a big number. I mean, it's not dissimilar to the plant that BHP just commissioned in Perth, right? They're making nickel sulfate there in Australia now. And the idea would be that we would replicate that. Do we do it alone or with a partner? I don't think it matters. I think the important thing is that we've got the permits, we've got the industrial park, we've quietly added to our footprint. We're now 600 acres of land, clay bedded infrastructure. And so I think this has to be with a view to vertical integration, probably more than one client on the back end. And so we're working through some MOUs on that front, but we can't do it alone because the nickel plant is probably going to exceed it will exceed our 200 million market cap. There's a lot of work to be done there.
On the same subject still, I'm going to read this here, a question. BMO Vice Chair David Jacobson has warned of a potential critical mineral crisis, not unlike the 70s oil crisis. It's another way of looking at raw materials prices. How likely is that scenario?
I studied economics in school, so there are laws of supply and demand dictate that there's going to be a price response and there'll have to be a supply response. I think policy is going to play a part of this. But I think we all see this wall of worry building up instead of 4 and 5 years out. Part of my response to the same investor earlier today is I think the voice of a Jim Farley at Ford is going to be a little louder than Trent Mell at Electra, right, at the White House, saying, here's what we need. And I think as they spend more, and you pointed out, Frik, they're so reliant on not just security of supply, but a logical cost structure for the sale price of their batteries that I've been told this is right in the C-suite. Supply of cobalt and nickel is something they talk about at the top levels of the automakers. And I think it's those kinds of voices when they come to the table that's going to result in a couple of things. I think there'll be some policy changes. There'll be some structural changes to get these assets to market faster. And I will not be surprised to see auto companies buying more and more mining assets to lock up their critical needs. And
also, I mean, if you look at Australia, they built, I think, 4 spodumene mines in like a 6-year period. So, if you bang some heads together, it can be done.
It's a bit like the COVID response, right? With the pharmacies and pharmaceutical companies and coming up with the vaccine. I mean, you need that oh shoot moment, if I can put it that way, right? For everybody to come together and realize we gotta act and act fast. And I think we're getting there. I guess I don't worry too much because I always assume that there will be a supply response. We've got some smart minds here in the industry to find the resources, but we're going to need the resolve and the support of the capital markets and the regulators to get them built faster.
We probably, maybe need a warp speed, like we had a warp speed program for vaccines. Why not have a warp speed program for cobalt, nickel, and lithium? Is there a bit of education or PR to be done for cobalt as a metal?
Yeah. I mean, I think the cobalt industry needed to clean up its act, right? The DRC issues of child labor and corruption, Dan Gertler, there's a whole bunch of reasons why you don't want to be in the DRC. On the other hand, that's where Mother Nature put the resources. Yes. And so as an industry, the likes of Tesla and VW have teamed up with the likes of ERG and Glencore to work with the Fair Cobalt Alliance to clean up that supply chain, right? Make sure it's big. I mean, I worked at Barrick, I've worked at big companies. You operate your mines around the world by the same standards. And if you go into these operations, they don't look dissimilar to what you'll see in the rest of the world, in Australia and elsewhere. So you it's sourcing, it's tracing, it's certification, it's third-party audits, and all of that is coming together. So then the elimination of cobalt in the battery, well, it stems from two things. One is the crazy prices we saw in 2017, $50 a pound, and a concern over what it did to the cost of the cathode and of course, overall availability. And second, and maybe more importantly, because it had a lasting, searing, image on the brain of these children working in mines of some of the artisanal plays. And that issue can be dealt with, just like we dealt with blood diamonds, just like we deal with tin from the Northeast. And the answer is there. I think we can get there. The challenge of getting cobalt out of the battery is real. The thermal runaway is real. And the dirty little secret is that I won't name any executives, but the car company execs that say they're going to zero cobalt, they're not going to cobalt zero. They're going to low cobalt. And so there's a little bit of a slip of the tongue. We're going from a 111 at the initial cathode, where it's a third nickel, cobalt, manganese. We're on our way from a 622 to 811, so 80% nickel. And in many cases, we're at 90% nickel. So nickel gives you that range and that density. Going to zero cobalt, the auto company engineers will tell you the trade-offs are not worth it. The risk reward of a little bit of extra mileage and the risk of thermal runaway is just not there. So I don't see it. Even the ELNO, some of the new technologies you're hearing out of Europe, there's small amounts. They're taking it out of the name for marketing reasons.
I was surprised. I think 1 out of 5 Mercedes sold this year was electric. So, one tends to concentrate on a Tesla or, the Rivian, stratospheric share prices. But, a good old electric Merc is probably, in your future.
I bought a Tesla 3 a couple of years ago. And in North America, you didn't have a lot of choices, right? There was an Audi. There was, I can't remember what else. There was very little to choose from. At the Shanghai Auto Show going on right now, I think there's about, I recall, 239 different models of new energy vehicles that are being displayed as we speak. Half of them are, pure EV, and the other half, roughly are hybrids. So the selection has already doubled this year. We've gone from 14 to 28 in the US. It's going to go up by another 60% next year. So we in Canada are going to be the beneficiaries of greater availability. But the European models that are out there now, the microcars, we just wouldn't like them. It's moving fast. I think, so let me just, one last thought. Last year during COVID, passenger sales in Europe were down 26%. EV sales were up, I think, threefold, roughly, if my math is right. Year to date in North America, I think we're up 140%. The investment announcements, the velocity of investments, the amount of dollars that are being thrown to infrastructure in North America suggests to me that the EV adoption rate in North America is a lot closer than people think. And I think in 2 years from now, it'll be a very different landscape.
Excellent, gentlemen. Yeah, Trent, it's hard to get the kids and the dog into the back of a micro. That is the issue. So listen, both of you, really enjoyable conversation. Thank you so much for taking the time. Thanks, Trent. Continued success.
Thank you, Trent.
Thank you.
And there you have it, another episode of the Northern Miner Podcast. We have one more for the year coming next week. And again, if you're looking for that last-minute Christmas gift, do not forget northernminer.com/subscribe. If you want to help out the podcast, leave us a review in the Apple Podcast directory, share it with your friends. And until next week, Merry Christmas and take care.